So, good morning, everybody. Thank you very much for joining us this morning. My name is Dennis. I represent the SpinUp Accelerator that is also part of the Data Market Services. Today, we will have a webinar on how to fund your startup during this harsh times of the coronavirus. With me are the two experts, Björn Bauermeister and Dirk Frohnert, who will introduce themselves in a minute. So thank you very much for joining. When you need support for your startup in this hard time, not only in case of financing, but also in sales and marketing, please join our open call at datamarketservices.eu. It's a second call of data-centric acceleration program funded by the European Commission, where you can get excellent service mentoring and coaching by coaches all over Europe on the topics of financing, marketing, and sales. This free webinar is like a teaser of the things that we do during the acceleration program, which runs for 6 months during this year. The call is still open till the end of May. So please feel free to apply for this program. During the webinar, you've got the chat to ask us questions. Please use the chat functionality in the user panel, and we will try to cover all your questions you might have during the webinar. We will not show you any slides. We will share first-hand information, and please ask as many questions as possible. Now I will give the word to our two experts today.
Hello, good morning, everyone, and thanks in advance for spending some time with us in these quite interesting and I bet quite challenging times. As Dennis already mentioned, the most important thing is interactivity. So please don't hesitate to ask any questions that you have, even if some of the questions will come to your mind only after the call. Please get in touch with Dennis or ourselves if there's something you want our opinion on. I think first of all we start by introducing ourselves quickly, and then we give you an overview what we believe how the funding landscape for startups will look like in the next couple of months and even quarters. So yes, good morning. My name is Dirk. My background is I have a finance background, and I used to be a fund manager for JP Morgan in London. Worked there for about 10 years. And I'm a co-founder of Smart Infrastructure Ventures, an early stage VC fund, which is the first private VC fund in the former GDR. And let me hand over the word to my co-founder Björn.
Hi, my name is Björn. I have a financial background as well. I used to work for a big French bank, BNP Paribas, as a trader in structured credits. And so I was a market maker for roughly 3,000 bonds, which I traded with other hedge funds, mutual funds, pension schemes, and central banks. And I'm a co-founder of Smart Infrastructure Ventures as well. So Dirk and I and a third partner founded the new fund. And we focus on, as the name indicates, smart infrastructure. We invest in areas of e-health, smart city, energy topics, and mobility. And we can invest up to 200,000 with the first ticket, and reserve most of the capital for follow-up rounds. Yeah, we started last year in summer, have done one investment already, and are focused to do at least 4 to 5 investments more this year. So yeah, so we decided to do this webinar because we with our interaction with other startups and co-investors, we found out that there are different opinions about how to tackle this corona crisis. And we want to share our findings with you so that you can make an informed decision in your financing process in the next coming month. And maybe it will help you to be successfully go through this crisis and do the right things at the right time. And hopefully our findings will help you to tackle the situation.
I think what is important, so although we have only done in our fund one investment, both of us, Björn and myself, as well as our venture partners in our funds, have been active business angels before. So overall, every one of us participated. So in our team, we participated in roughly 70 financing rounds. So we have quite a few years of experience in investing in startups. And what we did beforehand, before this call, as a general routine, we spoke to different types of investors. So we regularly have discussions with other private VC funds, with business angels, with corporate VCs, with more strategic investors, so corporates, as well as with state or semi-state VC funds. And we would like to give you an overview how these different players in the VC market, how they act in the current times, and what they think how this crisis will pan out. I think what is important before we dive into our opinions quite deeply is that we give you an overview basically on the general landscape. We don't focus on any particular countries. We will say something about country-specific issues and government support. We will speak about that at the end of our call.
All right. So I guess let's get started. So first of all, maybe it's we will point out what different type of investors there are, and then at the next stage we'll talk about how they behave in this current situation. So obviously for you as a startup, it's very important to first classify or define the kind of investor you want to have on board with your company, right? So there are different types of investors which follow different, have different targets or different goals to achieve. For example, first you have the regular, the business angel who usually invests early stage on. Obviously, in the current situation, those business angels are probably less incentivized to invest. Why is that? Well, our findings are obviously kind of obvious. They invest with their private wealth, and the wealth usually is heavily invested in equity, and equity has been hit quite severely, although we have seen a slight recovery recently. So the overall wealth has deteriorated for those private people, and usually venture capital is just a part of their investment strategy. So when the entire portfolio deteriorates, the fraction they would invest in venture capital deteriorates as well. So that's why usually business angels in this current situation are more laid back and watch the scenery rather than be actively involved. A second type of investor is the semi public or public VC, which is usually kind of a state-funded vehicle. In Germany, for example, you have several of those, but in other countries as well. They have the official agenda to support the VC market. So that's why they have this public goal to facilitate financing for early stage startups. So that's why they shouldn't be affected by this crisis at all in terms of activity. However, we have seen that there are because sometimes there is a there's a financial incentive motivation for the management of those public funds to do really well. That's why they usually are not as active in this kind of crisis than they used to be. But that could differ from the different type of public investors. So there you wouldn't necessarily see a big shift in terms of activity. The biggest changes you will find in corporate venture capitalists and private venture funds. Those obviously manage private money, and as the current crisis has a knock-on impact on the valuation of most of the transactions, let it be venture capital, but also equity or bonds. The entire financial market has repriced, and I would see that repricing in venture capital as well. So that's why private VCs and usually corporate VCs will tend to not to invest at this stage in new will not do new investments at this stage. The issue here is that they have a current portfolio going on, and most of these startups are invested on earlier. They have to make sure that these portfolio companies will survive the crisis. So what they do is usually they use the money they could invest and rather finance their current existing portfolio than doing new investments. So that's why you would see those kind of investors being less active in this current environment, which obviously has a negative impact on you as a new startup who is seeking for funding. And in addition to that, the corporate VC usually has a budget available, so it's not separated or segregated capital that sits in a different vehicle. It's usually attached or it's part of the balance sheet of the corporate itself. And once in this crisis mode, a corporate sees profits dropping, the first thing they will do is cut the budgets for non-essential departments. And one of these departments usually is the corporate VC part. So that's why there's less capital available from these kind of investors, and therefore has a knock-on impact on the current financing activities for early stage startups.
I think before I give our opinion on what is currently in general happening in the funding market, I'd like to answer the question. So in general, when we talk about startups, it has nothing to do if it's pre or post revenue. So it just means that a company has been established or has been around for, let's say, less than 5 years. So basically a small company. Doesn't need to be pre or post revenue, but we think that most of the things we talk about cover all startups. Doesn't mean if it's pre or post revenue, although having said that, pre-revenue companies, given the burn rate is much higher pre-revenue, that means things we talk about apply even in a much severe way to those companies. I think in general what we can expect is that the funding process, normally there was a rule of thumb before this crisis that a funding round would take roughly 6 months from like starting to talk to investors until the round is closed. 6 to, let's say, sometimes even 9 months. I think in general funding rounds will take longer in this crisis until they are done. So that's one thing that founders have to keep in mind. Fundraising will take much more time. So in case you want to raise if you want to raise money by investors, let's say at the end of or sometime next year, it's better to start early than later. So just try and be on the safe side, plan take more time, give yourself more time for the fundraising. But the question is, why is it? Why does it take so much longer? There are several reasons for that. First of all, investors want to meet startup founders at least once, probably twice. They want to see the office, want to see the whole funding team, the whole founding team. So given the current quarantine, it's difficult to meet people in person. So that will definitely delay the whole process. Same for notaries. Yeah, some people want to attend notary appointments, so that is quite difficult in the current time. Then we already said that some investors in this crisis will be less active, or in some cases even won't do new investments. So that means that there is less demand for investments in venture capital. So that means that it will take longer for you to find the right investor that invests in your startups, because there's just less people and investors willing to invest at the moment, given the reasons Björn mentioned before. So, and having said that, it is quite important that, yeah, time is very important. So just make sure that you stay on the right side, that you have your cash burn, that you take a good look at it and adjust it as early as you can, yeah, so that you don't run into troubles. What it means as well is that obviously negotiations, once you found a potential investor, negotiations normally just take longer. As Björn already mentioned, stock market valuations have deteriorated quite significantly, although they have rebounded. The same applies to valuations. So investors want to invest at lower valuations than they wanted, let's say, 3 months ago. Another reason why what could lead to a defer in the funding round, why it takes longer, is that investors in general find it hard. Well, in general, they find it hard to predict what the traction of a startup will be. And it's even more difficult to predict what attraction of a startup will be post-corona, because we have never been in such a situation. And even the IMF predicts that the severity of the economic downturn will be stronger than during the financial crisis. So investors are less, or are more risk averse in these circumstances. And coming back to the question, what does it mean, especially for pre-revenue startups? It will be even more difficult to find external investors. So what can we recommend? I would definitely try and speak to, well, we all know the 3 Fs, friends, family, and fools. They will be even more important in these times, because it's more difficult to talk to external investors that don't know you. So there's a much larger likelihood that you will find investors from your current network. It's quite difficult to speak to outside investors in these circumstances.
To be prepared in this crisis, I guess it's always helpful that you understand why the investor acts the way he does, and so to think about what is the current situation of the investor in this situation. And as we pointed out earlier, it's these few reasons. And for example, there is as we Dirk and myself, we both have managed to come out of two financial crises in a row in a trader or a portfolio management position. So what we see in crisis modes is that valuations usually drop quite significantly. For maybe not for a long period of time, but it could drop significantly more than what like stock markets or other markets you can observe better suggest. So, for example, during my time at BNP Paribas, when I was responsible for a portfolio of illiquid assets, which could look a little bit like startup investments, some valuations dropped more than 50%. That is not to say that this is the case right now, but I think this information is valuable to understand how the market reacts potentially. So it's usually behind the scenes, the valuation drop more severely than it suggests from the outside. So, that being said, there's a saying in the financial world that nobody has been fired so far by doing an investment during the crisis. So that is something just keep in mind, that that kind of explains the risk averse behavior of investors in such a situation. However, there are obviously a lot of recommendations how to survive in this situation, and what you have to do in order to increase your likelihood of getting to a situation where an investor comes on board. As Dirk said earlier, one of the most important things in this crisis is clearly to try to expand your runway, that you have a focus on your cost at this stage. Try and reduce cost as best as possible, or at least prepare different scenarios when you talk to an investor, how you tackle the current situation. I think being prepared for talks with an investor, it's crucial that you understand fully your cost situation and have already thought about where you could cut costs the easiest way, and present these kind of scenarios to your investor. And then I think you have a much higher likelihood of getting external capital on board.
I think that's a very important point, what Björn pointed out, that in these times where investors are more risk averse, what they will pay especially attention to is the cost structure of a startup. So I think one of the most important things is, aside from factoring in more time in your fundraising process, is have a look at your cost structure and be quite diligent and take a look at what costs you can already cut before you talk to investors. Because the last thing investors want to do is invest in a startup, and 6 months later all the investment of the investor is spent and the startup is asking for new money again. So extending the runway is very crucial. And if you think that you need a large amount of money, let's say for marketing, so basically one-off investments where the outcome or the effect of that investment is quite uncertain, then think again if you can spend the money more wisely and more impactful, rather than a one-off marketing campaign. So I think these are very important points. Consider more time for your fundraising, and be very cost conscious in any way, shape or form. So try and extend your runway, and if in this process that will take longer, if you then find a potential investor, I think it's important that you at least that you show that you understand the current situation and understand the investor as well. Don't negotiate too hard on terms. So let's make a step towards the investor. Valuation is not everything, and valuations that you had in mind 3 or 4 months ago, they are simple. It's quite unlikely that investors will invest at those valuations in the current crisis.
Maybe one more advice, or being more specific in terms of what your runway should look like when you approach an investor. Usually an investor defines a suitable runway being at least 12 months, but actually it's actually 18 months. So between 12 and 18 months. So the money you're asking for should at least cover you for 18 months, and the runway without the financing should at least be 6 months.
Yeah, we have a question that is, we are asked, well, as you can see, if the mortality of startups will increase a lot. I think it will increase, yes, but I think it as well depends on state programs. So every European state has different state aid programs to help startups, and how much startups will survive in this crisis is as well a function of those support programs. I think what we can, and if VCs will ask more for giving less, yes, but I think if you see that the stock market dropped by 25%, that means as well that for venture capitalists, their exit market or the exit values that they can achieve will have dropped as well. So for venture capital investors, so that they can maintain their performance targets for their own investors, it is necessary that they reduce the valuations of the startups when they invest. So in general, mortality, will it go up? Yes, probably, especially because some startups are in the unfortunate position that they need money right now, and it's quite hard to find investors. So I think the most important advice, as we said, look at your cost basis and take a look at your at government programs in the country where you are. We will say something about that at the end of the call. Björn, do you want to answer the next question that came up?
Next question is, will there be a general shift in the preference of industry verticals due to the coronavirus? I think at this stage it's difficult to say. Obviously, like sectors like e-health obviously get much more attention. Digitizing the healthcare, obviously, that is now in the limelight because it's mostly the only way of doing things during this crisis. So it would give a push to this sector, obviously the current crisis. Will there be a general shift? I think it's too early to say at this stage. I think there are some business concepts or models that are very suitable for a crisis like this. But if it happens to get the same traction after the crisis is done, that needs to be seen. So I wouldn't go that far that there will be a general shift. I think there might be a general shift in how we interact and that like things like home office will become much more plays a much bigger part in our daily lives. But and obviously business models which suit these kind of new settings will benefit in the end from this. But I do not see a general shift in the way investors invest at this stage. I believe that e-health will get a bigger push, and that it will continue to grow at a higher rate than other sectors, but I wouldn't go any further than that.
Well, I think, as Björn said, some sectors, especially let's say within tourism, within mobility, within let's say gastro, restaurants, etc., eating out, food, there might be they might struggle for a bit longer than others actually. But it's yeah, it's a quite brave call to make that there will be permanent shifts. But in general, I think some of the trends this crisis will just strengthen. So Björn already mentioned the trend towards e-health, away from traditional healthcare, anything to do with web conferencing, well-being, etc. Home improvement. I think these are all things that were trends anyway. I think they will just be even more pronounced. The next question, is it more important to focus on customer retention than acquisition? I think it really depends on the costs. How much does it cost to retain a customer or to acquire a new customer? So I think it's a pure financial decision, but in most cases retention is cheaper than acquisition. So definitely yes. So unless you still have a very long runway, then you can try both. But in general, I would recommend to do the thing that costs or that extends or doesn't shorten your runway too much. So basically, what is more cost efficient, I would focus on.
Maybe one important side note on this question: whether a customer, it depends a bit on your product, obviously, and you always have to understand your customer in this current situation. How badly is your customer affected by this by the corona crisis, and that kind of will determine also whether it makes sense to acquire new customers or retain the existing ones. What I'm trying to say here is, if your product only adds value at a margin for the customer, and in normal times, like a performance increase or efficiency increase of like 2 or 3% with your tool would be awesome. But now, as the customer himself is in crisis mode, when, for example, it's a production company and they had to lay off or have to stop the production due to the crisis, then the least thing this customer wants is to talk about a tool that increases efficiency internally, because there are much bigger problems they have to solve first. So the priority of your customer shifts during the crisis. So always keep that in mind, that sometimes we have seen it with our portfolio companies, that in the first couple of weeks, none of the potential customers actually answered the phone or wanted to talk about like a new software tool, because they have bigger issues to solve first. Always keep that in mind, depending on what your product is or your service is. Try to establish how important your solution is for the customer at this stage. If it's a production company, it's highly likely that acquisition will have absolutely no effect. So you should keep pushing retaining your existing clients, because it probably would be a waste of time asking new customers to come on board when they have to solve their production crisis beforehand. So always keep that in mind. So that it could vary from product to product, but in the end, it's all about looking at the cost of and the sales cycle as well. If you have a short sales cycle, maybe acquisition makes sense, but usually in B2B, the sales cycle is quite long, and it probably makes more sense to retain. If you spend money on retaining existing customers.
And another potential strategy could be that you offer your product at least for a few months for free to a potential customer. So that means that the customer has a benefit right from day one. He uses the product rather than that he needs to buy the product. And so if he can try it out, the product for a few months for free, he's probably more willing to try the product. And if he then within those 2 or 3 months, if he then sees an increase in productivity and sees the need for your product, then he might become a paying customer after that free period. The next question, if we assist on accessing other grants like Horizon 2020 or local governments, what we will do, I mean, because we are, although we invest in Europe, but our focus is really on Germany, and that's where we are familiar with the legislation. What we will do, please follow us on LinkedIn, Smart Infrastructure Ventures. Dennis, maybe you can write down you can show our website on LinkedIn. And what we will do, we will afterwards, after this call, we will share an overview of one of our partners. It's a law firm, CMS, and they have compiled an overview for all European countries and the support programs in those countries. So yeah, please visit our website on LinkedIn and follow it. And in the afternoon today, we will post this article from CMS, and there you can find more information about your support programs in your country. I think that is very important, that everything we said is about raising investments mainly from private investors. So the most, or probably one of the most important things is make yourself familiar with the support programs in your countries and in your regions, and that doesn't only cover grants, etc., but as well things like furlough or short-term employment, temporary employment benefits, etc. Because that's what we have seen quite a lot, especially in Germany, that startups that they reduced their expense for their workforce by using these state programs like furlough.
But in terms of the Data Market Services Accelerator, there we also help you to get an overview about European funds and European funding. So besides the VC part that Dirk and Björn are covering, we in the DMS Accelerator, we will help you to access grants under the program of H2020 or the following programs.
Okay. So let's, there's another question. How open do you think a startup should be to big brands in which you are starting a partnership, being not able to start because of the delay of funding? That's an interesting question. I think in general, a startup, well, if you have the chance to make, I'm not sure that I understand the question correctly.
Is the question related to once you reveal that you don't have sufficient funding, that you fear that the big company will not give you the contract because they fear that you will go insolvent during the project? Is that the question?
I mean, in general, well, if there's one good thing about this crisis is that everyone is affected by it. So even if you are worried that, let's say, your sales have in March have dropped to 0, and I think these things like the decrease in traction, every startup suffered this. So and even when this crisis is over, it's very easy to explain why your traction dropped in those months. And even if you work with bigger corporates and they are keen on working with you, they I'm sure they will fully understand the situation you are in. Maybe if you start any bigger projects with a larger corporate, maybe you can even ask at least for partially payment in advance, because they know that funding is quite, or resources are quite limited in these stressful times. Okay, super. Yeah, I think let's quickly rephrase and summarize. Let's quickly rephrase and summarize what is important for you from a funding perspective. So first of all, take your time. Like, you will need more time in this crisis to speak to investors, to meet investors, to convince investors, to negotiate with investors. So that means even if your runway is still, even if you still have a runway for 6 or 9 months, better be early to start with your fundraising. Another thing is, like, investors will obviously ask, so okay, what has your traction been in the last few months, etc. So be more open, be quick in answering those questions. So obviously most investors will switch to video conferencing, etc. So although it's more tricky to meet in person, it doesn't mean that you can't talk to investors. But yeah, be open, and I think it's important, understand your investors. Okay, what type of investor is it? And depending on that, you can figure out, okay, is he still investing? I think that's an important question always to ask. Have you invested in the recent month, etc.? And yeah, be open in the negotiations. The more flexible you are in terms of valuations, so in terms of how much shares you are giving to new investors, and the more flexible you are in terms of conditions, the more likely it is that you will get funding.
Yeah, just be prepared and communicate properly that you have understood the difficult situation and that you have measures in place to extend your runway, or at least communicate where you would cut cost the easiest, yeah, or where can you reduce cost in general. Have several scenarios prepared if you are asked, so that that the investor sees that you are well prepared for the next couple of months, and that is always a very positive sign. We have seen that in talks with a lot of startups in the past couple of weeks, that there are big differences. You know, the more experienced founders, they understand the situation, they expect it to be a longer crisis, and that it has impact on everything, basically, from the customer base, funding, and also hiring. On the hiring part, it's like a positive situation, obviously. But from first-time founders, for example, we got the impression that it took quite some time for them to understand the new situation. Like a few weeks ago, even we had a chat on a current funding round in the IoT sector, and the founder didn't expect the current situation have any impact on his funding round, and that was quite a surprise to us to hear these kind of answers. So that's clearly something a potential investor doesn't want to hear from a founder or founding team. You know, be open, look to the right and look to the left, what's happening outside of your topic, your vertical, and be prepared. I think that's a very key message. If you come across as unaware of the situation, no private investor would invest, unfortunately. I think it's special times, and doing the homework and to go well prepared in any kind of negotiation, I think is key at this stage.
Another important thing is who should you speak to in terms of investment. We already said, if you're an early stage startup, you should even more focus on the 3 Fs: friends, family, and fools. So basically your direct network. It's much more likely that you will find potential angel investors in that in those groups. If you already have investors, internal rounds will play a much more important role. What is an internal round? It basically means that current investors will finance your next round. So there won't be new external money from new shareholders, but existing shareholders will invest again in your startups because they know you already, they already have access to your data, they already did their due diligence, they see your traction, etc. And be more flexible in terms of the type of round. So what we expect is that there will be an increase in, for example, convertibles rather than equity rounds. And because the big advantage of a convertible is you don't need to go to a notary, you can just sign someone within a few minutes. The contract is in many cases only 2 or 3 pages, and even smaller tickets, 10,000, 20,000, 50,000 euros, you can easily have a contract ready for that, and you don't need to make a notary appointment. So that's what we will see, much more bridge rounds, so smaller rounds. They will take more time, but most of them will be in the form of convertibles.
There are some more questions. First question, do you feel you will invest in this climate? The answer is a clear yes. We are currently in talks with the e-health startup where we would like to invest in. But here's a similar situation, because we can't meet all, or at least all the investors can't meet the founding team. The round has been postponed by 3 weeks or 4 weeks. So we are definitely in a situation to invest. And as I said in the introduction, we hope to invest in 4 to 5 startups this year.
I think it's important in that sense to understand why we are still open for business, and because we just raised our fund in the last year. So that means we are sitting on cash that we want to invest. So I think that is important to keep in mind when you speak to VCs. If the VC is quite old, so if the current fund has been raised a few years ago, there's a higher likelihood that a VC will focus on their current portfolio. If a VC already made, let's say, 10 investments in the current portfolio, it's quite likely that they won't look at new investments and focus on internal rounds. So they will focus on the startups they already invested in. On the other hand, you have funds like us, where they raised the money recently, so there is no existing portfolio, so they are still keen to invest. And I think that is important to find out, okay, how many investments does the VC, how many investments have they made already in their current fund? If it's a lot, then the likelihood is smaller that they will be open for new investments. But in our case, yes, we still plan to make 4 to 5 investments in the early stage this year.
Next question is an interesting one. Will the public co-investment fund that the BMWI plans to set up revive the VC financing, and will you use it? Yes, obviously, any kind of additional money will help the VC market. So we strongly believe that it will be very helpful. Obviously, it's not clear yet what the timing would look like and how the money will be distributed. But actually, we hope to some extent, at least, that we could be part of that kind of process at some point, because there are voices saying that the distribution of funding from those public funds should be decentralized, and decentralized would mean that there could be a slight chance that existing funds could get a top up by this funding and to distribute it via their means. But we need to see, there are no details out there yet, and but we have heard some voices in the committee that there's a strong view that it should be a decentralized process, which would mean that it would revive the VC financing market more efficiently than just setting up a new public vehicle like the HTGF, for example, in Germany, and distribute the money. But we'll see. I think it's unfortunately too early to say what the criteria and what the process will look like.
The next question, I'm not sure if I understand it correctly. Is it possible that European investors are focusing on countries like Spain for the cost efficiency of their startups, or are they attracted to lower ratings?
I think financing or funding, what determines funding is the idea, the business idea of the actual startup, no matter where it sits, in what country, and how bad the country is affected by the corona crisis, if that's a question, if that's the right question. If your cost structure in Spain is lower than, for example, as in Germany, I'm not quite sure that this criteria on its own is important to make the investment decision. You know, the investment decision is based on several criteria. The cost base is one of them, but first of all, the idea and the market, the size of the market, the growth potential of the idea is key. And then the next step would be cost efficiency, obviously. So I don't think it plays a big role, to be honest.
Yeah, I think in these times, investors, even more so than before, will stick to their home turf. So it is less likely that an investor will cross borders. Like if an investor is mainly focusing on Germany during this crisis, he won't start then investing abroad. So I think if anything, investors will basically take less risk, and that means they don't go to new jurisdictions, don't go to new verticals, don't go to new countries. So let's say if you are based in Spain, what we can recommend is that you focus on investors that mainly invest in Spain, because they will continue to do so. But from our perspective, it's quite difficult to convince a foreign investor that hasn't invested in those jurisdictions yet. What are the costs if we use your channel for financing investment? Dennis, that is probably
so
question for you.
So if the question is related to the DMS accelerator, there are no costs. So this is a total free of cost program that you apply for. So the question before, but does it mean to be in Leipzig? So the Data Market Services Accelerator is a complete hybrid accelerator program which focuses on online training. We do promote you to go to on-site events like trade fairs if they take place. And we do have a boot camp at the end of the year where we all meet together, the top teams, and have on-site training, but mostly it's all online and it's totally free of charge. So you get direct access to VCs. We do VC shortlisting and matchmaking to really get you through this tough times. So no cost, just your time.
Okay, I think if there are no other questions, then I repeat what I said before. Please follow.
There is one question. So why should we sign an NDA? So it's all, so for the acceleration program, it's all based on trust. So like the relationship between a VC and the startup is based on trust. So trust is like also a currency in this whole financing business. So we don't. Yes, I don't know. What about you, Björn?
Yeah. So from a VC perspective, usually there are no NDAs. It's actually for, if anything, for a VC, asking to sign an NDA is sometimes could be a knockout criteria, to be honest. So the VC world as well is based on trust. If a startup believes that their unique idea will be copied by a VC by sending the pitch deck, I don't think that's what this is all about. A VC has no time to do that. They see thousands of ideas per year, and I think that is the least to worry. But I can tell you, if you ask for an NDA, most of the VCs say, thank you very much. We have no time for that shit. So.
Yeah, I mean, if you require an NDA, it basically means that it's even more time consuming and more tricky to find investors that do this. So basically you are harming yourself because you are extending this this time-consuming funding process even more. And yeah, as Björn and Dennis said, you will have far fewer, if not none, investors that are willing to speak to you. Okay. Interesting question. Yes. Yes, that's a good question. That's a we can take this offline, but you're right. This is basically one of the business angel investments Björn and I have in the sports sponsoring industry. So we wouldn't look at it anyway, because it's not a vertical for our fund. So therefore, I'm afraid we wouldn't look at your deck, because in the fund we basically invest in, as Björn said, energy, smart city, e-health, and related areas. But yeah, so I once again repeat, please follow us on our LinkedIn website, and we will post some information of country-specific aid programs. We will post that later today. So please follow us on LinkedIn. And yeah, over to you, Dennis.
Yeah, so thank you very much for your time this morning, Dirk and Björn. And thanks for your time and attendance and all the questions. So this made this session very interactive. So thank you very much for actually participating. So please, just one reminder. So when you are looking for more mentoring and to really get to really accelerate your startup on the European market. So if you are a data-centric startup located in the EU and you are already funded, please apply for the Data Market Services Accelerator on datamarketservices.eu. The open call is still running till the end of May. The program will start then in the summertime till the end of the year with great trainers from the Next Web, from Ogilvy in the marketing sector, Spin Lab, so where I'm from, also do coaching. You will meet Dirk and Björn again when you go for investors matchmaking. So please apply, feel free, and join us. And yeah, stay safe, stay healthy.
Thank you very much. Thank you very much for your time. Appreciate it, and all the best to you guys.